All right, so good evening, everyone, and welcome to today's YouTube live session of Skill Age. As it is every time we invite an expert in the field of finance to talk to you, and it is a lot of learning experience for people like me as well. So I'm very pleased to welcome today Dinesh Sabu, who I know for quite some time is an expert in the field of credit, right? He's one of the best guys that I know who has, the knowledge across the entire domain in this area. Dinesh is a commerce graduate from St. Xavier's College, has done his PGD from IBS Hyderabad, and is also a charter holder from CFA Institute. So fantastic qualification to be in this domain, and has extensive experience of about 14 years in various banks, multinational or global banks, as well as in different types of organizations, entirely focused on credits. And I think Dinesh within that a lot of experience in the fixed income markets. So Dinesh, can you welcome to the program first, and spending time with us. Can you just spend 2 minutes maybe talking about your experience in the credit domain itself, for us to understand where you come from?
Sure. All right. Thank you, Shailendra, for the quick introduction. And thank you once again for inviting me to this show. And people who are viewing it right now, good evening, everyone. Okay, about my introduction. So I think Shailendra has spoken about, the academic part of it. I won't repeat it, but on the credit side, so I started my career as an equity research analyst, so not on the credit side. And I was covering aerospace and defense sector for the European market, which is a niche sector to cover. I worked there for like 2.5, 3 years, post which I moved to a credit role. And since then, I've been into credit role across various firms and across various domains. So when we talk about credit, I initially started as a credit research analyst with a bank. So from a lending perspective. And then I had been into various roles where it is not about lending, but it is about asset management. So a lot of people think that credit is just about lending. That's not the case. So credit is also about asset management, asset allocation. And when you think about overall asset allocation, credit is a substantial part. So I had worked with a prop trading desk who was managing a fixed income portfolio in the emerging market. And people who know a little bit about credit would understand I was handling the high yield part of it, which is more complex credit. So credit is an interesting domain, and we'll speak, Shailendra, in detail. But you can, summarize my experience as, I have worked across specific domains of credit all across the cycle. Okay. And therefore, credit is a beautiful world, and we'll explore it. Yeah.
Absolutely. Thanks. So who exactly hires credit analysts, right? So if somebody develops an expertise in that area, so a lot of our students are, freshers or maybe up to 2 years experience. They are, trying to understand what kind of roles they should go for, right? So who hires them? What kind of, you mentioned a few, what kind of firms hire them? Can you give us some idea about that?
Absolutely. So as I said, and what I want the audience to understand is credit is not just about lending; it is also about asset management and money management. So if you see hiring part of it, so the biggest chunk which people already know, the hires are the banks and the financial institutions who are into the lending business. And this might just not include sophisticated banks. This might include cooperative bank. This might include NBFCs. This might include any other institution which is into the business of lending money directly or indirectly. So this is the biggest world for credit analysts, where a lot of credit analysts will get hired. Then the second world on how where people hire is on the asset management side of it. So you can get hired with a fund manager who manages a fixed income portfolio. That portfolio might be divided into certain categories, but not going into that. So you can work with a fund manager or a portfolio manager. You can work with a mutual fund, and other hires are sell side analyst, like in equity research, there is a separate group of sell side analysts who publishes research. A similar group exists on the credit side. So those are the other hires. And other than that, as this entire credit landscape is changing and this fintech world is evolving, a lot of fintech have also started hiring credit analysts because they really need domain experts who can help them build good products which can sell in the market on the credit side.
All right. So there are a lot of opportunities, as I understand, and there are multiple types of players, and there will be certain nuances of, what exactly they focus on. So, so just, just explain to us, what when we talk about a credit analyst, what does exactly a credit analyst do? Like, what does the day in the life of a credit analyst look like, right? I know all jobs may not have exactly the same thing, but if you have to give some idea to our students.
Absolutely. Before we go that, I just forgot to mention, like all the views that I'm sharing here are my personal views. They do not represent my employer views or anybody's else views. And our experiences drawn from my career.
Absolutely.
So coming to your next question, Shailendra. So what does a credit analyst do? So a very good question. And I want to clarify this to the audience that credit analyst is not a complex subject. Okay. Credit analysis, anybody can do. You can do, I can do. Anybody who is joining this call, anybody can do. I would say credit analysis is 90% business analysis. So if you are a good analyst of business, typically we say that equity analysts are the people who can really understand the businesses very sharply, and they know what drives the businesses. So if you have that acumen to understand the business and research a business, I think 90% of the work is very common between equity analysis and credit analysis. It's just that the perception changes, and the study and the research slightly changes at the end, because ultimately your end goal is different. Okay, even within credit analysis, if you are sitting on the lending side of the credit, your end journey for a particular project will be different as compared to when you are sitting on the asset management side of the credit. Okay, so what I would say is credit analysis is nothing, it's primarily business analysis. Ultimately, you have to understand that for a credit analysis, two things are very important. One is the cash flows that a business will generate, and how will they manage the cash flows, and whether those cash flows significantly exceed the interest and the funding obligations that a company has. So very much similar to balance sheet analysis and cash flow analysis, which a lot of people on the equity side are familiar with.
All right. And I always, tell the students that if you don't understand business, your, knowledge of finance is completely useless, correct? Because you apply that knowledge in a specific context, whether you're in hospitality, retail, e-commerce, it is going to differ. So thanks. I think that's a very good point. Having been in this area for, over 10, 12 years, what are the key emerging trends, or what changes do you see happening? Key things, maybe top 2-3 things you see happening in this area, for us to know, so that we can prepare for those.
Absolutely. So I'll cover this in two parts. First, let's cover in what's happening on the banking and lending side of the things, and then we'll move on to the asset management. So on the excuse me. So on the lending side, there are a lot of things which are emerging. Okay, the point is that earlier the lending process was very much traditional based. There was a lot of human angle involved and the subjectivity involved. A lot of those things are getting automated. Okay, so for example, in stock markets, trading is getting automated through algo trading. In a similar way here in credit analysis, the work of a credit analyst or a risk manager is getting automated through artificial intelligence and development of specific software modules which help in this process. So that is one thing. Second thing is on the lending business side also, a lot, as I said, apart from the banks, a lot of other firms and other business models have emerged. Business models like peer-to-peer lending, okay, those kind of firms, a lot of NBFCs, a lot of other very, very niche firms who maybe do not do lending, but they connect lenders with the borrowers, and they do that job pretty well. So that's the lending landscape. People are realizing that, particularly on the Indian market context, there is still a lot of space and a lot of bandwidth available when it comes to lending. Okay, and when we talk about lending, there are different kinds of lending, like small consumer retail lending, then small corporates lending, then gradually medium and large size corporate. So that's on the lending side of it. On the asset management side of it, the world is very vast. A lot of pension funds, a lot of fund managers, they have their mandate is to kind of put money into the fixed income side of the things. So and on the asset management side, I would divide the world into two parts. So one is the investment grade part, okay, which you can say are highly simple and more safer credits, where less of research and analysis is required. Okay, and then there is the second part, which is the high yield part, where more research analysis is required, because those are riskier ones. Okay, so across both the sides, see, what I am trying to say is, both on the asset management side, things are going to remain like that, and growth is going to come definitely. But from an automation perspective, IG has a more space for automation, and high yield has more space for human intelligence and research input. And that space still will continue to grow, because from an asset allocation perspective, people have mandate to put things on fixed income, and that is not going to go anywhere, right? So those are the emerging trends in this domain.
Absolutely, yeah. So I think even if you see asset management overall is getting extremely with technology, a lot of automation is happening. Like even the kind of funds like index funds, etc., they have taken a lot of sort of creation of alpha responsibility has been taken away from the
Yes.
The portfolio managers.
Yes.
All right. So it rhymes with that what is happening on the equity side. Then if somebody wants to be getting into this role, what are the kind of skills that they should acquire in order to aspire for that role, and of course perform on that role as well?
Absolutely. So as I said earlier, Shailendra, the most important skill here is you should have a passion to understand businesses. Okay, if you have a passion to understand businesses, I think things will move very smoothly, both on the lending side and on the asset management side. On the lending side, another skill set which becomes more important is your relationship management skills, because in a lot of markets, including India, credit analysis and business development, means getting more clients to lend more money, is a combined area. Like it's not properly separated. And therefore, if you are in the Indian markets on the lending side, you might have a dual responsibility of getting more clients for the bank or the lending institution, and also making sure that you have done a proper research and analysis to make sure that your money is safe. So that is one side where I say that business understanding is very critical for both the sides. For the lending side, your relationship management skills are important. Okay, and one thing which is common across both the sides is your finance acumen. Okay, so which I am kind of collaborating into the business understanding. If you have a good business understanding, good finance acumen, and ability to read the financial statements clearly and get signals out of them, and predict what's going to happen in the industry and how the company is going to get impacted. Very, very similar to what equity analysts do. We don't do different things. And that is why I'm trying to emphasize, very clearly that credit is not different. it is not different. People think that it is different. No, it is not different. It is absolutely same. It's just that your perspective of decision making slightly changes at the end.
Absolutely. So, just like, banks have this constant struggle of finding, customers who are willing to pay more, right? Better return. And then, the risk you have to optimize, right? So you have to go settle for that. So I think that's the constant struggle that I think still remains, correct? So,
Yes.
As I understand. Okay.
Yes. I also wanted to mention one more point is one thing, one difference that I see, if you want to aspire on the equity side versus credit side, as you will move towards a career on the credit side, you will realize that your knowledge of statistics is very important. And this is more important when you are on the asset management side, because a lot of concepts which are used in the asset management side, like Z spreads, yield curves, convexity, etc., are based on very, very strong statistical concepts. And therefore, if you are good in quantitative finance, you have a very good chance to do well on the asset management side.
Perfect. Yeah. And I think mathematics or passion for numbers is extremely important for any role in finance. And
Yes.
probably when you speak of something like convexity, I think that becomes more important.
Yes.
Great.
Yes.
And then something like a bread and butter question. So what kind of progression approach? Where does one typically start, right? And what is the kind of a progression that happens in this role? And what are the kind of trends you see on the the remuneration or reward side? Right? I know it's a very generic question. It will change a lot, but if you, having been in industry for some time, if you can share some perspective on that.
Yeah, sure. No, that's it's a very important question for the viewers. So, okay, see, I would again break it down into two parts. Okay, so if you are on the lending side of the credit, okay, then typically you might not start as a credit analyst. Okay, you might maybe start on the pure sales role or a pure operations role. And then gradually, as you perform, there is a possibility that you might move to a more granular credit role. Okay. And once you move to a credit role, as I said, particularly in Indian markets, I'm talking more in context of Indian markets. So within banks and lending institutions, as you grow further in this, you will have a dual responsibility of taking care of the business and the targets, and also making sure that credit analysis is perfectly captured and those tick marks are met. So in terms of the compensation, see, typically I think you can very well compare to, if you are a lot of our viewers are from tier 2 institutes, tier 2 colleges. Typically when you compare even on the equity side and the credit side, I think starting salaries are roughly ranging between 5 to 8 lakhs for a person without any experience on the credit side. And then as you grow further, there is a scope to grow, and you can switch between banks, financial institutions. There are a lot of opportunities in Indian markets on the lending side. So that's one. Second is, if you don't start directly with credit, for example, in my case, I did not go to credit by choice. Okay, I just went to credit, and I didn't. In fact, I was not aware that this is the overall world of credit when I actually stepped into it. But now, since I've spent so much years into it, I realize that for people who coincidentally step into the credit world, it is not a bad thing. Okay, so there are a lot of opportunities there. So even people, if you have explored equity and you see a very good opportunity in credit, you can explore that. So that's on the banking and the lending side of it. On the asset management side of it, opportunities are very limited, I would say, because as I said, a lot of the asset management market is investment grade market, and investment grade market is they don't require too much of people, because those are less complex instruments. They don't require so much of research efforts. Sorry, but on the high side, a lot of people are required. So I was lucky to work with prop trader and trading desk on the high yield side, uh, and it gave me a very good flavor of how the decisions are made, how the trading is done. Okay, and on the statistical part of it also. So if somebody wants to pursue a career on the asset management side, I think he should start with a mutual fund. Okay, he should try exploring that mutual fund entry route, wherein he can work as a junior analyst with a fund manager or in similar profile, and then move up the ladder. And there is a high possibility that in 10, 12, 13 years you can become a fund manager for a fixed income portfolio, managing that entire fund.
Great. So I think when you speak about 10 to 12 years, I think that's a decent, if somebody starts at about 23, 24, right? By about 35 or so, he can be having, that kind of a position where he can really aspire for a great career in the future as well.
Yes.
So great. So thanks for clarifying that world and bifurcating it into asset managers, etc. So many of the people are not aware, that pensions and, for example, the insurance industry, which invests heavily in the fixed income markets, they are very tightly regulated, and the regulator has very clear guidelines, what kind of bonds, etc. you can invest in, right? So that's why probably you are saying the application of your skills is relatively not called for, right? Less though you might have those kind of skills. And yes, I think hedge funds, etc., which strategize and invest into junk bonds, or what you have also said, high yield, I think there'll be a lot of sort of use of your skills in that domain, and you might also get rewarded more handsomely, right? So yes, that's what that's the takeaway.
I also wanted to mention one point, like fixed income market is very prominent and very vast in the developed markets, including US and UK. And there are a lot of prop trading desk which trades in the emerging markets, including the Central Eastern Europe, Middle East markets, African markets. So what I want to say to the viewers is that on the asset management side, the opportunities are global in nature. They are not Indian in nature. Indian opportunities are very limited. In fact, you will find more global opportunities, and these global opportunities will come through two ways. One is like a lot of big institutions have set up back office spaces, like companies like Goldman Sachs, etc. They have back office spaces in India, and through that they have fixed income departments, etc., where you can go and explore those opportunities. Another is a lot of pension funds, etc. They also have small offices setups in India. And other than that, there are also a lot of KPOs and outsourcing third-party service providers who have got clients in this space extensively. And through working with these clients, you can explore this area quite a lot. I mean, if you ask me what is more interesting from my perspective on the lending side, asset management side, I would say intellectually for me, asset management side was more interesting and intellectually stimulating, because you see you are managing money, and it's always about money, and returns and alpha and those things. On the lending side, it's about the process. Once you have set up a process to perfectly do the credit analysis, calculate probability of default, etc., if that process is perfect, okay, and the people who are doing that process is perfect, then things are absolutely fine. So at a point of time, when you grow more senior, it is all about making that process and managing that process. Once it is done, your day-to-day routine might become monotonous. But on the asset management side, if you are 2 years experience or if you are 15 years experience, it is one and the same thing. You will feel the same. So yeah.
All right, great. And that's why when you mentioned about it becoming process driven, that's where these algos are coming in, and within seconds they are approving credit and so on and so forth, right? So I think Government of India also had that initiative about a year or two back, where they were approving loans and then sending out to banks by doing the preliminary due diligence online on the basis of basic information.
Yeah.
Great. So, so I think lots of valuable information and a lot of learning for me as well, Dinesh. Thanks a lot. So, just we don't normally extend this session beyond about 25 minutes. We are touching that, but just, what last piece of advice you would like to give someone who wants to, further explore this domain and career opportunity?
Sure. So, Shailendra, see, my advice is simple. What I would say is that if you are a finance professional, okay, and my advice is more to the young people who are entering this industry. Most of our viewers fall into that category. So, if you are a finance professional, I would say don't restrict your aspirations to a particular subject or a domain. I would say because opportunities are immense. Okay. So if you get an opportunity, explore it. There is very high chance if you want to move to another opportunity, it will be possible. Okay. So my first advice is don't restrict your mind saying that I want to do only equity, I want to do only credit, or I want to go only into asset management, I want to go only into lending, or I don't want to go into pure sales role. I only want to go into a pure research analytical role. Those things should not be there in any youngster's mind. That is my first advice for the viewers. And my second advice is finance. And again, I'm repeating this again and again. Finance is all about understanding a business and understanding the business financials. If you are good at understanding the financials and reading the financials, and you get better and better at it, I think you can excel throughout your career in this. So that's the second piece of advice. And the third piece of advice is, if you want to go onto the credit side, be strong in statistics and Excel. Don't ignore those subjects, particularly on the statistics side. Measures of central tendency, probability of default, these concepts are important.
Great. I think fantastically summarized the entire conversation in those 3 points. So thanks much. I think, Dinesh, it has been a pleasure talking to you again. And, we look forward to talk to you maybe sometime in future as well. Thanks for, sharing your ideas and, providing benefit to our students in terms of, if you're there looking into this domain as a career, right? So thank you very much. I would like to close, this conversation today, and all the best and see you soon.
Thank you, Shailendra. All the best to you and our viewers.
Thank you. Thanks, everyone. See you.